Hello and welcome to the Deduction, a tax foundation podcast. I'm your host, Kyle Hulehan, and we are back again today with another election episode with my co-host, Erica York, senior economist and research director here at the Tax Foundation. Erica, how are you doing today?
Doing well, Kyle. How are you?
I'm good. The election is finally over. I have had an overwhelming amount of ads that I am so thankful to be done with and to never watch it anymore. I'm in New Jersey, right across the border from Pennsylvania, and I have been crushed by ads. So that's done. The election's over. And today we're going to break down what Donald Trump and his presidency are going to mean for you. So let's just dive in. Erica, it looks like the GOP is going to have control over the House, the Senate, and of course, the presidency. What do these results mean for the U.S. going forward and tax plans and such?
Yeah, so a GOP trifecta means that the Venn diagram of what leaders in the Senate and leaders in the House and, of course, the president want to do has a lot of overlap. So the buzzword that people are probably going to start hearing a lot is reconciliation. This is a legislative procedure that essentially lets Congress fast track policy, pass it with a simple majority in the Senate. It's the tool that was used to enact the 2017 tax law, Tax Cuts and Jobs Act, and it's probably the tool that's going to be used again to act on taxes. There's rumblings right now. There's been reporting that lawmakers want to rip off the Band-Aid and pursue tax policy changes like right from the get-go. So I think it's watch and see. There's the potential that something on tax policy could happen very fast in the new year.
So when we're talking about these, something happening on tax, is his plan to extend the TCJ? We had this whole episode about, our tax cuts are expiring and that would be a lot of money for us. So what's the plan there?
Yeah, I would say it's a question mark. Trump obviously campaigned on extending those tax cuts. That alone would reduce revenue by more than $4 trillion over the next decade. He also campaigned on adding a lot of tax cuts on top of that. So exempting tips, exempting Social Security, exempting overtime pay from income taxes, creating this itemized deduction for auto loan interest, all of these various ideas. So now the question becomes, given that those tax cuts all add up to, about $8 trillion of lower revenue over the next decade for the federal government, what does Congress do with that? We know what Trump's opening bid is. It's all of those tax cuts. But deficits are going to be a big concern because we have high interest rates. We already have climbing debt for the federal government. So that puts pressure on lawmakers to find ways to trim the cost. And that complicates the debate quite a bit when there are even more asks. I think what happens is some form of extension of those expiring tax cuts. One thing that I've been thinking through is how would an everyday taxpayer, feel that? We're all used to the Tax Cuts and Jobs Act. We've been paying taxes under that for the past 6 years. We have a $2,000 child tax credit. It's not really going to feel like a tax cut if that gets extended. It's just going to feel like the same old policy. And then if you layer, you know, offsets, ways to pay for that on top, you could actually feel worse compared to what you feel right now. And that's because, everyday taxpayers operate under a different baseline than Congress does. Congress knows those tax cuts are expiring. If they extend them, that's a tax cut in budget terms. But for everyday people, it might not feel like it. So I think it's going to be tough politically for Congress to figure out what to do.
That's really interesting. I think I'm wondering, do you feel like there are any specific ideas or has anything been talked about what would be cut? Because $8 trillion is so much.
Yeah, there hasn't been a lot of detail yet, and unfortunately, some of the offsets, some of the ways that they, quote unquote, paid for some of these tax cuts the first time around was to place limitations on itemized deductions. So we limit how much people can deduct, and we use that revenue to reduce rates. Um, there's been a lot of pushback against some of those limitations, particularly the limitation on state and local tax deductions. SALT might be, a buzzword people have heard about. Um, if you lift the SALT cap, that actually makes it even more expensive to do the tax cuts. So I haven't seen anything clear. I think there's probably a lot of brainstorming going on right now. What do we prioritize? Can we look at other areas of the tax code? One idea that Trump has that is a good one is to look at some of the green energy tax credits passed in the Inflation Reduction Act and pull back on some of those. We've estimated that if you got rid of all of those entirely, that would raise a little more than $900 billion, which is a lot, but it's less than a fourth of the cost of the tax cuts, the revenue loss of the tax cut extension. So that would still mean they come up really short. And that might also be politically difficult to pull back on what have proven to be pretty popular tax credits.
And to get to what has been so far, sort of the magic bullet, the thing that's going to raise a lot of money for everything. How will tariffs be implemented, and how much could this cost taxpayers?
This is another really uncertain area. So, Congress has delegated a lot of authority to the executive, allowing a president to impose tariffs in certain instances. Trump used a lot of these authorities during his first term to put tariffs on steel and aluminum, China, washing machines, solar panels. And he's talked about using those authorities again to increase tariffs on China, to impose tariffs on Mexico, and potentially do this universal baseline tariff idea. We just published new estimates yesterday on how much revenue could be raised by this universal tariff. If it's set at 10%, which Trump has talked about, we estimate it would raise about $2 trillion in higher tax revenue over the budget window. If he does it at 20%, it would raise a bit more than $3 trillion. So, still well short of that $4 trillion number. And the burden of those tariffs would fall hardest on lower and middle income households. Lower and middle income households, as we've talked about before, consume more of their income than higher income households who can afford to save more of their income. So by consuming more and consuming more traded goods, most of the things we buy at Walmart, a lot of our food, especially if you think about access to fresh food during the winter, coffee, that sort of thing, that's imported. If the cost of that goes up, that's particularly hard on lower and middle income households. And then that brings me back to that point I was talking about earlier. Just continuing the tax cut isn't going to feel personally like a big tax cut. And if you combine that with higher prices at the grocery store, that feels like you're worse off by quite a bit. And in fact, some lower and middle income households would be worse off under tariffs as a pay for. So I don't think that's a useful avenue, but it does seem like it is at least somewhat politically possible, especially because that authority lies with the president. And we know that Trump has a different view of tariffs and really believes in them. And so is probably likely to pursue them in some form or fashion.
So wait, could you clarify that for me real quick? He can just the President Trump is can just implement tariffs on his own. He doesn't really need anybody else's authority.
Right. There's no up or down vote in Congress for tariffs. Now there are some procedural rules that have to be followed. For instance, it might require an investigation by the United States Trade Representative or the Commerce Department. So they would go through that investigative process, issue a report with recommendations, and then the president can act on those recommendations and choose to implement tariffs. Some of the statutory reasons for and instigating an investigation are things like unfair trade practices, national security concerns. So the big question is whether those authorities would really allow the president to do a universal tariff on everything. There are some emergency authorities where the president can declare some sort of national emergency and then in response to that do a universal tariff. In that case, those would be temporary universal tariffs. So that complicates the question of can these pay for tax reform if they're only a temporary thing? Can he just continually reauthorize the temporary tariffs? Lots of questions. But what we saw in the first term was that the Trump administration didn't have much hesitancy for kind of pushing the envelope on what trade authorities permitted. And so I don't have a lot of doubt that we would see something similar this time around.
Okay, wow. Yeah, I mean, I think that might surprise a lot of listeners to know that the president has so much power over tariffs. It's sort of an unchecked power. Now, we've been a little negative again. I mean, maybe not as hopeful and positive. I think, very clearly, the election was a very clear result. There was a rejection of the Biden administration, no doubt. And economy was a big, important issue. And I'm just wondering if, you know, we have modeled Donald Trump's tax plan and there is some good in it. And I'm wondering maybe if you could share some of that good to maybe add on a little bit of a hopeful note that maybe the economy would do a little bit better.
Yeah, I laments to what Trump has proposed on taxes, especially if we look at the investment type provisions that he's talked about, even on the campaign trail. He talked about full expensing for capital investments, full expensing for research and development. All of those are good things. Those would boost incentives to invest in the U.S. economy. They would grow wages. They would grow how much we produce here. So that's good. And generally on taxes, we see several good ideas like that. We also see the complicated ideas, um, the big deficit impact, the tariffs. So the net effect that they have on the economy will really depend on what gets prioritized and what gets implemented. But there is promise for improvement on the tax policy front.
So there you go, folks. I mean, look, we can't, give you, 100% perfect picture of everything that's going to happen. We don't know what's going to happen. I think there, to some degree, President Trump, when he's on the campaign trail, says some things, and that's okay. I think we'll see what he does, and we have his plan modeled. You can check that out on our website. But real quick before we sign off, I do want to plug. We have an online event next week. So please subscribe to our YouTube channel here. Click that little bell and you'll be notified for our event. It's a big event next week about just election takeaways, and that's on November 15th. And you'll get a lot of information about the election and our takeaways and where tax policy and the economy is going. Erica, I just want to say thank you for being on the show today. It's been a pleasure doing this with you.
Yeah, thank you, Kyle. This has been a lot of fun.
It really has been. And so before we sign off, if you have any more questions, keep sending them our way. And you can do that at podcast@taxfoundation.org. That's our email. And then on Twitter, it's @deductionpod. Thank you for listening.